Webinar will begin in 1 minute. Welcome, everyone. Thanks for joining us for today's webinar, Managing Medicare Part B Premiums. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting material by email. You will also be told how you may email questions related to today's content to the presenter. Today's presenter is Linus Sugis. Linus worked for a Chicago-based insurance company in various roles, including Director of Advanced Sales and as Chief Marketing Officer. He ran and sold a successful estate planning law practice in Franklin, Tennessee. Linus also writes the publication Think About It, founded by life insurance industry guru Steve Lineberg, and Linus regularly speaks at industry events. Before I turn the floor over to Linus, we are going to vote on the April webinar. And as a reminder, on March 4th, we will discuss planning ideas for 2026, so please join us for that. The topics up for your consideration for the April webinar are Roth conversions and rollovers, dealing with missed RMDs, or IRS updates 1099-R reporting for QCDs. And if you'll give me 1 second, I will launch the poll and give everyone a minute to vote. All right, it looks like everyone has voted. And in April, we will be covering Roth conversions and rollovers. Thank you so much for participating in that. And don't forget to mark your calendars for that. And with that, I will turn the presentation over to Linus.
Welcome, everyone. I'm pleased that you have joined us for today's webinar titled Managing Medicare Part B Premiums. Today's session is part of our webinar series. Each of these webinars is open to those in the life insurance and the financial services industries, and the webinars are free of charge. Before we begin, I'd like to remind you that next month's webinar will be held on Wednesday, March 4th at 11 a.m. Central Time. The topic will be planning ideas for 2026. If you know of a financial professional who might be interested in one of our monthly topics, feel welcome to invite them to join us. This webinar will last approximately 15 minutes, and let's get started. So we're going to talk about 4 things during our short webinar today. First of all, we're going to talk about how the Medicare program works and how premiums are determined. Obviously, we're not going to go in a lot of depth. We're going to just touch base there. We're going to talk about the 2-year waiting period for determining Medicare premiums. We're going to talk about the ways to manage Medicare premiums with taxable, tax-deferred, and tax-free income in retirement. And then we'll also touch briefly on possible relief, which would be to ask the Medicaid authority to ignore certain kinds of income so that the income-based premiums don't go up. So let's go ahead and get started with a brief overview of the Medicare system. So most everyone who is 65 years or older, they're covered by Medicare. If they're U.S. citizens, they're covered by the Medicare program. They simply need to apply, and that's the most common way for them to get health insurance. Those that do apply and are eligible generally get Medicare Part A coverage at no extra cost, and the Part B coverage, the part that we're talking about today, that has a premium associated with it that must be paid. If a person is 65 or older and collecting Social Security, the monthly Medicare premiums are generally deducted directly from the Social Security retirement benefits. For those who are not yet collecting, they generally get a quarterly bill from the Medicare authority, which they need to pay in order to continue to be covered by the Medicare insurance. Medicare, as I alluded to earlier, is an income-based premium. Part B premiums are based on somebody's income. And so if we've got an individual who has made $109,000 or less, the monthly premium for 2026 is just under $203. If we've got somebody who is high income, making more than $500,000 and is an individual taxpayer, the premium's a lot higher. It's nearly $700 a month. And so you can see that there's nearly a $500 a month difference in Medicare Part B premiums depending on how much income the particular Medicare participant has. And it's also interesting to me that unlike tax brackets where somebody's over a particular tax bracket threshold by $1, it's only the extra dollar that gets hit with the higher tax rate. This is a black and white threshold. If you're an individual taxpayer and you've got $109,000 of income exactly, you pay the $202.90 monthly premium in 2026. However, if you have $109,001 of income in 2026, you jump up to the higher monthly premium of $284.10. And so it's for our clients who are watching their dollars, and most of our clients are, understanding these thresholds, where they hit, and exactly how much extra somebody might have to pay if they're above the threshold limit. It's an important consideration for people who are trying to manage how much money they have available in retirement. This chart changes every year. It's indexed generally for inflation. The premium amounts and the thresholds both potentially change every year. The thresholds are based on modified adjusted gross income. For most people, modified adjusted gross income is going to be the same number as adjusted gross income. Tax-exempt interest is probably the one thing that would be added to AGI that might make somebody get into a higher bracket. The other things, as you can see from the chart, they're a lot less common and wouldn't apply to a lot of our taxpayers. But as I said earlier, MAGI and AGI for most of our clients, I would say, is going to be the same number. So timing is an important issue with regard to Medicare premiums. The premium amounts for a given calendar year are based on the information from the tax return for the second year prior. What does that mean? Well, that means the premium for 2026 for somebody who's paying Part B is based on 2024's modified adjusted gross income as reported on the federal income tax return. And so this year's income tax return for 2026 will potentially affect 2028's Part B premium. I guess the bigger observation is this: there are Part B premium management opportunities that start beginning when somebody turns age 63 or sooner, right? Excess income at age 63 will affect the initial Medicare Part B premium. If somebody is trying to plan to manage Part B premiums, they need to start thinking about it before age 63 because income starting at age 63 does affect premiums. And it is possible for Medicare Part B premiums to go up and down. If income fluctuates in the 2 years prior to the premium, the premium amount can fluctuate quite a bit depending on how much income somebody gets. So our clients who want to potentially manage their Part B premiums, what should they be considering? Well, the simple answer is for those who are approaching retirement or those who are thinking about how much retirement income they're going to be able to keep, they ought to think about investing in tax-deferred and tax-free vehicles. Tax-deferred vehicles such as a non-qualified annuity, the client has the ability to choose when to take distributions, and that choice will recognize the income tax result, but there's a lot of flexibility on how much and when the client will be able to take income and how it will affect Part B premiums. So having tax-deferred investments in the portfolio gives some management opportunities. A person may also seek to invest in assets that produce tax-free returns. The classic example of this is a Roth IRA. It is good for a lot of our clients who are planning for retirement to have Roth IRAs, not only because Roth IRAs produce income tax-free income in retirement, but the Roth IRA distributions are not included as part of modified adjusted gross income. They will not affect distributions from a Roth IRA if they're tax-free, will not affect the MAGI calculation, will not increase Part B premiums. And oh, by the way, it's not only Roth IRAs that can be used for managing income. Permanent life insurance can be used as well. If we've got a non-MEC policy, we've got the ability to access cash value on a preferred basis. One thing that people also need to think about in managing Part B premiums is that if we've got older clients, 73 or older, who have significant qualified plan balances, such as IRAs or leftover 401k plans from working days, minimum distributions are generally going to be income taxable. They generally must be taken, and they're going to affect modified adjusted gross income and potentially Part B premiums. So if we've got people who are 73 or older with substantial qualified plan balances, the RMDs have the ability to affect the Part B premiums. And so one of the things that I think we should keep in mind is to make sure that those with qualified plan balances consider putting their qualified plan monies into IRAs and plan to use QCDs, particularly if they have charitable intent. They should plan to use QCDs to cover their minimum distributions. If they do that, whatever amount that they send directly from the IRA to charity will go towards satisfying their IRA RMD amount, and the QCD itself will not increase their modified adjusted gross income for the purpose of Part B premiums. So QCDs are a valid strategy to try to help manage our Part B premiums, particularly for those who are required to take RMDs and are paying Part B premiums. One thing that Jennifer and I at Advanced Underwriting Consultants get asked about quite a bit is we get asked about possible relief from Part B premiums. There is a form that can be submitted to the Medicare authority, in which the taxpayer can tell the Medicare authority, look, my income in a particular year was higher due to some kind of unusual circumstances, and therefore you should ignore this particular year for the purpose of calculating my current year Part B premiums. The form for submitting this is SSA-44, which you submit to the Social Security Administration. It's titled Medicare Income Related Monthly Adjustment Amount Life-Changing Event. There needs to have been a life-changing event that would cause a much higher income in a particular year, where the taxpayer can prove that following year's income is lower, where you can ask the IRS to reduce the Part B premium that would otherwise be charged by that bigger income. The form itself limits the kinds of categories for life-changing events to the usual suspects: marriage, divorce, death of a spouse, loss of work, reduction of hours, loss of income-producing property, loss of pension income, or one-time employer settlement payment. Note what is not on here. There is no box for Roth conversions. So if you advise a client to do a Roth conversion in a particular year, and the Roth conversion increases their modified adjusted gross income in 2 years following, there's nothing on this form that would allow a client to ask the Social Security Administration to reduce their Part B premium due to the Roth conversion. This form is designed to say yes only to bigger incomes in a particular year due to life-changing events. And so there you go. So what are the conclusions that I hope you take away from today's webinar? First of all, Part B premiums are a potential hidden tax for those who are covered by Medicare but have high income. They don't call it an income tax, but it is in effect an income tax, and people need to take steps to manage those premiums. Some have the ability to manage taxable income in retirement. If they do, they have the ability to manage the amount of Part B premiums that they might choose to pay. Finally, there are techniques that can be used to manage Roth conversions in the years after Part B premiums start. Things like QCDs, as we talked about earlier, but even Roth conversions can be thought about later on. While a Roth conversion might cause somebody to pay a higher Part B premium in a particular year, in the long term, having access to the Roth IRA tax-free income might allow future Medicare Part B premiums to be lower. So I'd like to thank you again for joining us today. As a reminder, if you'd like to receive the supporting materials related to today's webinar, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's content. Feel welcome to join us for the next webinar on the first Wednesday of next month, March 4th, at this same time. Next month's webinar will be titled Planning Ideas for 2026. You can also find an archive of past webinars on our YouTube channel, Advanced Underwriting Consultants. Please subscribe to our channel. It helps us to keep making free webinar content. And today's presentation will be posted on our YouTube channel by the end of this week. And finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again, and best wishes for continued success.